Okay, so we're live. Welcome, Loven. How are you
All
doing
right.
today?
Thank you. Thank you. I'm doing good, Alan. Thank you so much for having me here. It's a great privilege for me to be here. I guess I'm the first Filipino or Asian person to be able to get invited, right?
Um,
Or particularly, I think Filipino.
actually, yeah.
It's such a privilege.
Oh,
Thank you so much.
that's awesome.
It's an honor. It's an honor for me.
What is the story? Why did you enter the
well,
financial markets?
well, as you all know,
Sorry.
I was a professional teacher actually. I've been in this industry for like I think 9 years, 9 long years before I finally quit as a teacher. I was also a school administrator there for 9 long years, and it's really surprising. I know it surprises you to learn that I'm now in the financial landscape, and I'm not even a major in math or economics, so it's really rare to see somebody a teacher who just jumped into this field. But I guess to give you a little story on how I was able to jump into here in the space is obviously because the profession doesn't really pay much. Teachers are really underpaid and overworked. And
Yeah.
when I get serious with life, when I got married, I have my own child. Even prior to that, when I get serious about relationship, I was really already thinking about where how can I augment my income. I've tried a lot of simple and short businesses, and they're not liquid, as we all know. People will try to ask for it for like I will pay this after a month or what, so the capital isn't rolling. So when I was searching about what good thing can I actually do that doesn't actually make like having a second job, I was able to look for the financial markets. And obviously, there are a lot of scammers. I was able to look at that. Hey, it looks easy, just have to click the button and get this and that amount of money. So I was like,
But
wow, that's
but
cool.
what you did, like what you did in the first job in the financial market?
The first thing I was trading on my own, and then right now I'm currently connected to a educational arm. I don't know, is it okay to mention?
Yeah, sure.
All right, cool. So it's FTH Club. We actually are here to educate people for free. That's why when you ask me, when I received the invitation and when I learned about what you're doing as a community, empowering people for free, I really able to get that resonating idea that I think we connect. I mean, that's a common ground that we have.
Yeah.
It's a ministry of helping, no costs or for entry. So yeah, from there on, until now, I'm still with them. I've been here for like I guess um, almost 3 years now. I am their head of training director. I would say training director. So I'm training people who wants to learn trading, and we are being sponsored or backed up by an Australian broker, JDR Securities. So essentially, they're the ones who are paying us, and instead of asking people to pay for the course, we don't ask for any payment instead because it's the broker who is supporting us for this endeavor. And obviously, if we say Asian countries, the financial literacy level is really low, and that is why what I love about it is that the mission of helping Filipinos in particular to learn about the financial markets. Because if you know, actually, the Central Bank of the Philippines, there was a speech of the government there, the governor rather. Do you know that only 25%, according to actually, I think that's the World Bank, 25% of the Filipinos doesn't really are the only ones who have basic financial knowledge concepts. So that means to say 75% doesn't really know. So that's why there are a lot of people who get scammed here in terms of financial markets. And I think that's where we get
No,
in. We
that's a
really,
gap. I mean, 70
yeah,
only
a big gap, really.
75% do not have it.
Yes, they don't really know. They don't know how to save. They don't have bank accounts. Imagine that. So that's why we're coming in. We want to share the knowledge that there's nothing to be scared about when you talk about finances. So we're not just teaching about Forex, how to trade. We also have a mentor who is sharing, we call it Money Mondays. So he shares lessons on financial literacy every Monday. So it's like we share how to trade, how to generate income in the financial markets. At the same time, they learn how to they have an avenue to learn how to also handle their finances. So it's a balance between the two. So hopefully we're able with this kind of endeavor with FTH Club, we're able to have this hope of being able to, with our little efforts, be able to improve and the gap, and sustain this in the longer run for our own countrymen.
I mean, the fact that you're doing this for free, like entirely free, it's incredible, really.
Yeah, yeah, yeah.
So
Well,
first of all, I appreciate what you're doing because, like, really, the financial
well,
markets are harsh. I mean, space. So
exactly, exactly. Well, I think one thing why I get connected with them is I was also taught for free, So when I got the chance to teach people, I really said I'll be doing it if it's free. And the good thing with them is that, again, it resonates. The values align. Just like how you invited me and learn about the community that you're building. That's why I said yes. I want to contribute. Obviously, right?
cool. So how do you train? Like, traders come to you, and what next?
Right. So what we do, we actually have a program. It's every Saturday. There's an orientation. People just get in, with some marketing efforts, posting here and there, and then from there, people will get to decide if should they want to trade or not. And then the next week, that's Monday to Wednesday. That's where I actually train them. That's a 3-day course. It's a first free course, and then within the week also, it's either Thursday or Wednesday. That depends on the other coaches. Again, as mentioned, there's a Money Monday. That's financial literacy for another coach, financial literacy coach. The other coach is a professional trader who's been there for, I think, 22 plus years also. He's teaching some strategies, he's adding strategies and concepts on a either Wednesday or Thursday. And then just earlier, 7 to 8, I also had my own share of trading strategy. So that's how it looks like on a weekly basis. So 3 days, Monday to Wednesday. For me, that's my part for newbies. And then Monday, the other coach we have for financial literacy, so that's simultaneous. Thursday and Wednesday and Thursday for the third coach, more on strategy, and my share on a Friday as well on a strategy. And Saturday is actually the general orientation for people who want to know what's in the community and what we can actually give them.
You said you transitioned from education to the financial markets. Now, how did you gain the knowledge? Like, how do you
Mm,
how did you learn everything that you needed to know to perform the
yeah,
job correctly? And so, because
yeah,
you were involved not right away in trading per se, right?
yes, yes,
But
yes.
more
It's really
into
teaching.
fundamental analysis. I'm
Yeah.
correct?
Even my approach today, yeah, it's really more of fundamentals. Although I really started with technicals. So the story was this. I started with stock market. I think that was the very popular thing here, stock market, investment. I first I looked at investment and tried to study on my own, for an area that is in the impoverished sector of the community. It's really rare. There's really a lack of comprehensive material to learn all of those. But if you just go to the internet, you just have to, persist. You really have to persevere if you really want to learn. And the good thing is I'm a major in languages, English. So I was just thinking, so long as it's written in English, I think I can learn it. So I really have to take the time to try to understand, because in terms of my local language, there's really not much of a material or resource that I can take in. So it's really more of international. Only later on when was able to learn that there are also communities here. But again, because of the problem with financial literacy, it's very difficult to be able to find them, right? So it really took me a year and a half to finally get that aha moment of, all right, I finally understand how it works. And then at that point, I think in the last 6 months, I think that was the time that I already transferred to testing crypto and Forex, and then stayed in Forex now until now. So I left already. I'm not trading in stock market anymore and crypto. I'm just focused on Forex right now.
Because it's
So
more
that's,
attractive.
yeah.
It's
Again,
more attractive. It's more attractive.
that's in my perspective at that point, it was not really about attraction of the income, because I think that's common among all markets. It's just that it's what fits in my lifestyle, because stock market is a centralized market, and in our own local stock market, when it's open, when it's operating from 9:30 to 3:30, that's also the same time that I'm working. So I don't really have the time to, be
Okay,
on the
got it.
screens, right? So good thing I learned about when I was searching, I learned about the bigger league, which is, crypto and Forex. I learned that there are pending orders, right? So like, okay, there's time freedom here. I can do it even if I'm working. So that's why I fell in love with Forex later on.
So as a trader, what are the biggest mistakes during volatile markets?
Biggest mistake,
How do you avoid them?
number one, I think biggest mistake really is, not being able to regulate your emotion. I've traded. I think the aha moment really came in when after my ninth consecutive losses, I lost nine straight times. And when I look at the data, um, I was able to look at it in a manner that is really process driven and data driven. So upon looking at my journal, because I was also journaling at that time, I noticed that my fourth, fifth, sixth until ninth trade wasn't really included in my plan. So the interval between these trades happened like I would say 10 minutes in between after each other. So it's really driven by emotion. So I think the lesson really is you have to be data driven. You have to regulate your emotion. And to be able to do that, you have to, document key metrics in your process. So it's really important to have your own system. You really record everything. You have a journal, right? And I cannot overstress the importance of having a clear trading plan before you trade. Like obviously, human as we are, we can't just go out there, walk, and without the idea of where you want to be in, right? Right before
Yeah.
you go outside the door, you should know already where you're going to. So you have to have a clear blueprint. You should know scenario planning. If market goes up, this is what I'm gonna do. But what if it goes down? This is how I react also. So yeah, I think those are the three things that we have to look into: planning, journaling, and process. Really important. You have to be data driven, and as you all know, you cannot suppress your emotion, right? You can't be a robot. So you just have to regulate that. And in my case, when I'm really stressed about it, my process before, I just look for a way, try to find who I am outside trading. So you have to take some rest, some break. In my case, just to have a great cup of coffee. I finally say I am OCD, obsessive coffee disorder. So I keep drinking coffee. That's what makes me relax, just to forget about the charts in the market, is to have some break. And then after that, go back and, reassess, and we're good. Just forget the last trade, continue. It's not every trade, it's about the whole set of trade. So yeah, I think the biggest mistake before. I was really not looking into data and was really trading even if I don't have a plan, driven by emotion. And I hope these are things that traders right now who are struggling would look into and really. I know it's really boring, when you are taking the journal, but it's really important. It's really, really important.
You're more of a yeah. You're more of a technical or fundamental trader. You just
um,
combine both then.
I would say 80% to 90% fundamentals, and then 20 to 10% technicals, because in my own framework, I'm a swing trader. So I really, because my background, I'm a teacher, so I can't really have the time to trade within the day. So it's more of letting it run for the whole week or 2 weeks or a month. So I'd love to have it scanned the market first in terms of having a bias, like what's gonna be happening in the next 6 to 12 months for this currency among all major currencies. Which one should be moving first? Which one is the fastest first? So I really consider fundamentals first, and then in terms of timing, that's where I look for buying or selling opportunity, and so that's how technical analysis would come in. So it's really combination, but majority comes from fundamentals.
I would like to like jump into the fundamental analysis. Like, what exactly do you focus on? What
In my
exactly
case,
are
yeah.
the resources or the information that you
Mhm.
need uh, to trade successfully?
All right. So in my case, what really works for me is I just have to look at data that happens to be a precursor of the policy changes, monetary policy changes, like what affects the central banks in terms of their decision as to whether they're gonna cut rates or hike rates. So I'm looking at two things. These are inflationary data as well as labor data. So in unemployment rate, NFP, and the likes. So those are the things because whatever data is happening there, that would really later on affect the decision of the central bank. So I'm not somebody who's waiting for central bank to do the actual cut first. Instead, I am looking ahead, meaning to say right before they actually do the cut, I'm already in. So I'm pricing in the market already because I'll be there for like a long time. Like for example, I remember during the pandemic when the yen was the only one who was not raising its interest rate, and then the dollar was the one who's moving first. So at the spectrum, you look at it, higher rates we have dollar, and then yen negative, all the rest are in between. So I was actually buying already USD JPY at that point. And then Chinese yuan also, I was buying dollar versus yuan because of the pandemic. Their economy is not really good. So I've stayed it for like quite a long time. And then funny thing is that I'm not really a fan of gold, but because of fundamentals, I held on gold for like 1 year because people are trying to invest there. It's a safe haven asset. So I was able to look at that like how long will the pandemic end? So I just forget the fund there. And so those are three things I was looking at that time. So yeah, it's really like that. That's how it works for me.
You have sometimes triggering events in the technical analysis. Like if you see a pattern, you jump into, or you just wait for the fundamental, like for the reports and for the banks to come up with the data, and then you make informed decision whether you want to trade or not.
In my case, again, as mentioned, I use fundamentals as my trend filter, my bias filter. So that gives me a context of which one's going to move and in which direction. So technicals for me, once I know already that, okay, UJ is going to be moving upward. So it's going to buy for me. So at that point, I start to scan from time to time in the lower time frame just to time in my entry. That's where a technical analysis comes in. So the thing that I'm doing there is I love to look for breakout patterns. So I'm either be on a breakout or retest. These are double bottoms, things like that. RSI divergence, these are my favorites, and Fibonacci, and because it's either buying on breakouts on the retest, and for the retest, it's more of the end of the correction. So I might use Fibonacci and divergence, potential that would help me to identify potential trend reversals. So technically, in terms of a framework, technical just comes in as in the execution for me as to when I exactly get in. But I already know that I will only buy this one. It's only my bias. I will not look for a sell setup because fundamentals tells me the direction and the bias for that.
What about the risk management? Because as good as technical analysis or fundamental analysis, I mean, the risk management is basically everything. So
correct. I totally agree with that. I cannot overstress that as well. Actually, I always tell my students, for me, I don't really look at your win rate. It's really more about your risk to reward ratio. How much are you risking versus your reward that you're trying to take? So it will not look like a gamble, right? So in my case, I'd rather have a great risk to reward ratio versus a good, win rate. In fact, I'm jokingly telling them statistics is a friend. I know I'm not really good in math. In fact, I don't memorize the multiplication table, but I soon fell in love with numbers.
You don't need this. I mean, you have a calculator and you're fine.
Exactly. You can actually do that, right? And in the charts, there are like a tool there where you can measure how many pips are there already. So there's no need to compute, right? But anyway, looking at that and jokingly saying, I tell them statistically, even if we hit the probability, right? You don't have any technique or what. So your probability of success is just 50%. Now, if you're hitting 1:1, you still end up break even. So you're not profitable. Now look at another trader who is winning, let us say, just 30%, but is looking at a 1:3 risk to reward ratio. So per se, you have 7 losses, $1 each, for example. but every time you win, you get thrice of that risk, which is $3. So that's $9 in total. So $9 minus $7, you're still profitable versus the other one who was 1:1,
For
50%.
example, if you
So
lose 7 trades and you win 3 of them, you're still profitable because you gain
correct,
$2 basically.
more. Correct. So that's why I always tell them, don't overstress with how good your strategy is. Although the challenge really there is the psychology. Can you bear, losing 70 times? I mean 70%, right? So the psychology starts to kick in. You start to self-doubt, the strategy. That's why I think that's the main reason why most traders jump from one technique to the other. Because every time they lose 3 consecutive times, they start to doubt and jump to another strategy because they're really looking at the holy grail, which doesn't really exist. It's really about risk to reward ratio and not about the strategy. Although it also pays to have a good win rate, but for me personally, on the logical perspective, it's really more of risk to reward ratio and psychology, because you cannot handle that risk to reward ratio well if your psychology is also weak. So that's why I always tell my students that I think we all understand that there's no cost for entry here. There's no need for a diploma, a degree, right? The market doesn't care if you're rich or you're poor. What it cares for is, do you have the resilience? Do you have the grit? Do you have the perseverance to continue even if you've been failing, even if you've been losing? Because it's normal. That's part of the journey. You can't get into the market with your fingers crossed, hoping that you keep winning, right? You At some point you will really lose. Imagine hitting only 50, let's say 60% win rate. In 1,000 trades, you still experience 400 losses, right? And that's a big number. But the question is, what's your psychology during that time, right? So for me, that's really a challenge that everybody has to overcome. And it all starts with acceptance of the reality. That's the reality. You really will lose here. Therefore, it's not really about IQ. That's what I tell them, nor EQ. It's AQ, adversity quotient. Do you have that grit in you that once you fail, it's a big loss, so consecutive losses, in my case, 9 straight losses, can you still continue? Will you not quit? So it's really more about that. I mean, for me, so it's interconnected in terms of risk management. It's not just risk management alone. It's also psychology.
Have you ever seen one of your students make that step to understand that yes, I'm losing, but still I'm winning in the long run?
Yes, yeah, I am actually. Yes, because we meet regularly, and as much as possible, they share their trading journal so that we can diagnose, so we can see their development, so that we can get in. We It's very stupid to be able to try to help them extend the help once they are able to wipe their whole account. So there's no point there. So
Yeah,
as
for
early
sure.
on, we really try to look at that already. Once they're down, like for this month, they're down this much. So we really encourage them. And I think it all starts with a relationship in the community. Once they trust you, they see that you're really a helping hand. They really approach you. Although there are really those that are, very reserved. So we really try to keep a trading journal as much as possible so that we can monitor them. And some account managers are also reporting that, Coach Van, this student have lost this much of amount. So I try to, approach them. Hey, what happened? How are you? Things like that. And then they start to share.
How does the trading journal looks like? Like, what do you write
Mm.
there?
Mm. It's very basic, they can be, it can be personalized, but what we share is that it's just a basic a base format wherein they can work on it later on. But in our case, we start with key metrics such as what are they trading, what instrument, is it buy or sell, what kind of execution pending or spot, and then the volume is very important. How much is the lot size? Because somehow I would also know that once the moment he kept losing or cutting early, which is a behavior pattern we will be observing, I would tend to say that it's because it's your first time to change your volume on a higher level from this much, say 5 lots, you change to 10 lots for the first time. So there's a fear there. So I would notice that's why you closed early, something like that. And more importantly, aside from those data like entry price, exit prices, also the anecdotal records. So you have to put in there 3 levels of psychology. How do you feel before you trade? How do you feel while you are in a trade and after you close the trade? And then other stuff like strategies, confluences and the likes. But more importantly, we're looking at being able to segregate which ones are the winning trades, which ones are the losing trades, and try to synthesize and summarize and look for the pattern. What pattern keeps on repeating every time you're losing? And what patterns keeps on repeating or existing once you are winning? Because those are the variables are telling you in terms of, all right, these are the things that you have to continue doing, and these are the things you have to look forward. Maybe you can remove them or try to look for an alternative. And we don't do it at once. We try to do it for every variable and try to see the results. So it's a long process, I would say.
But
A
but how do
minimum
you
of 100
discover the
trades.
pattern? Like this is
In the data, as mentioned, for example, you look at all the trades that are losing. For example, you place it there. You indicate these are the losing trades. Okay, this one lost. This one also lost. So look at the other side of the Excel. For example, this spreadsheet. So we look at it on the right side. Okay, so these are my behaviors. Let's say, for example, I didn't have enough sleep. Those are the common that I say, or I was scared, I'm anxious. And these are common things there. That's why they lost. Which means to say, once they are tired or they didn't have enough sleep, then you should not trade. Something like that, because these are patterns and variables that we can control only when we record them. Because once one doesn't put it into record, you don't recognize that these little habits actually contribute to them making the same mistakes or these mistakes in trading. Like for example, in my case, what did I say? After 3 consecutive losses, I stopped trading. That is because according to my data, my fourth trade most of the time happens right after I lost the third trade. Because I have the tendency, normally my system is that I just create 3 watch lists. I mean to say, if I lost on the last trade, I have the tendency to revenge on the fourth trade, even without a plan. And where did that come from? From the journal. One of the common thing there from those losses indicates or told me that I wasn't able to create a plan for this, or I was angry, or I was trying to revenge. I mean, I was hopeful. So you can figure it out in that part of the journal actually. So I tell them, okay, what makes you relax? Like for example, I was anxious. I want to take revenge. So what makes me relax? Coffee. So that's why I take breaks. So that actually stems from the journal itself.
fascinating. Really. You could put all the data into Excel and just analyze it. Literally.
Yeah.
Basically say, okay, well, I didn't get enough sleep, so I lost, let's say, 70%
Yeah, because
of the trades that I lost, I probably didn't get enough sleep, for example.
Yeah, because this is a performance-based sport. So you have to know what behavior or conditions makes you perform at your best. So if you see there that you relax or whatever, that suggests that right before you trade, you have to look for ways to make you relax first. That's why I notice there are some that are doing meditation first to make them relax before they jump into the charts. And again, that comes from the idea that they were able to get the insights from the synthesis of their journal.
By the way, also to get a cold shower to level up the dopamine levels, and so not to rush with the.
Yeah, that's also nice. Also,
I try to win as fast as possible, just to.
yeah.
In the inside, what would you have done differently during the period, like in the transition from education to the financial markets, or during the period that you were involved in the financial markets?
If there's something I want to change in that period, I think
Yeah.
I would perhaps say if I am able to meet my younger self now, I think I will tell him to try to look for a mentor. Because it took
For
me a
sure.
year and a half. I was doing it on my own. I think that's the big thing, because if you look at that, I think I was just lucky to be to have that perseverance, because if without that, I think in the first 3 months, I think I would quit already, you know. So I think I would really say look for a mentor as much as possible, as early as possible, so that you can, you know, hasten your learning curve, because the tendency of quitting will always be there, you know. There are a lot of times that I actually doubted myself. A lot of times that I thought of, you know, quitting. I felt like I'm just burning money. But what keeps me moving forward is because there are people I see that are really earning, and there are jobs and works in the banks that were in our portfolio managers. So it's real. So I felt like there's just something in the recipe that I have to figure out, you know. But again, if I'm given the chance to talk to a younger self, I would say look for a mentor.
For sure. Have you ever by the way, have you ever experienced imposter syndrome? Like, have you, and how you overcome it when you transitioned from education to the financial markets?
I think at
Because
that
it's
point,
definitely entirely like separate fields, so to
yeah,
speak.
correct. I think at that point
Almost.
I didn't feel it so much. Only lately when I become a mentor, because I felt like I wasn't really qualified. Because at that point I was just learning, you know, I was enjoying the process. So I didn't feel it much. But that syndrome came in when I became a mentor 3 years ago. I think 4 years to 3 years ago. Because I felt like I wasn't qualified. You know, this self doubts are coming in, because who would have thought teacher teaching something where he learned on his own. And if you look at the field, there are fund managers, you know, there are CTA holders and all, bankers, economists, mathematicians. I felt like this is not my space, you know, and I felt I don't have the confidence to share what I know, you know. I have this self doubt, and at that point, I just figure out, you know, I think it's more of loving yourself. You know, you have to do that self love, because while I was thinking about it also, I just put myself in the perspective of my students. You know, that what if I was a banker, an economist, a CTA holder, and here comes me joining the community. I think I will also doubt myself becoming a trader, because I felt like if my mentor has those credentials, I would feel like I should have those also, right? So at some point, although I was thinking about taking a CTA degree or a certification, what's pushing me back is that idea that I think it will create doubt to my students and a barrier for them to get in as well. So I felt like I think it's a good story to be totally different in terms of a background, to tell them that, hey, it's not important. You know, you just have to be there, trade as much as possible, learn, and process the experience, and you'll become a good trader on your own. So yeah, I think that's how I see it.
By the way, regarding your students,
Hmm.
can you share some success stories from your community that you've built where members have achieved significant milestones?
Hmm. I would say it's not really about milestones, although there are a lot, you know, they share income and all. But I think what's really striking, if I remember, right, if I'm to identify, it's stories of real people who had hope. Because, you know, I've mentioned the Philippines is not that good in terms of financial literacy, in terms of numbers, right? So I came across of a student who happens to be saving money in a piggy bank. You're familiar with a piggy bank? Again, we don't have much, people here are not used to banks. So they have this piggy bank that put the money. So obviously, inflation is eating that. And the moment they joined the orientation, you know, there was a spark in his eyes that I guess this is what gonna give me the life that I'm dreaming of. So I actually felt really emotional when I learned that he broke that piggy bank to use as a trading capital. And one of our face-to-face event, because again, this was actually done online, and he was living, I think, 5 hours away from where we are doing the face-to-face. One of the event, he showed up. just to say thank you and have a picture with me.
Wow.
So I was like, it's really striking, man. Until now, I still have goosebumps remembering that, and I'm really happy to, that's the ministry that I'm here to be able to share that hope that as Filipinos, there's still a hope to, have a great future in terms of finance, that you can still generate income outside from your job without having a second job, being overemployed, right? So they're doing it for quite some time. They love it because it doesn't require much of the time. They're earning actually, they've grown that account. And until now, I really feel fascinated about that story of, that's what we're doing, giving hope. And I think that's the best epitome of, I would say, the model of what kind of student I'm looking to. Somebody who just have this spark in their eyes once they meet us, saying that, hey, this is it. I finally found this community that will help us for free. Right? So it's really great to have that story, man.
Any last advice? Any book? Any key advice that you would give other than to get a mentor, because it's obvious?
But I think
I mean,
in terms of books, you have to start with financial literacy, because that's your why.
yeah.
You have to know why you're doing this, right? You can't just jump in there and learn how to generate income, because it's gonna be a waste of time later on. You're gonna splurge on luxury and anything. And in this space, it's not always consistent, especially for those who just jump in, right? Those new ones. It will not be a smooth sail, I would say, right? There are really months in your first 2 years, it will not be profitable, right? It will be a break even, right? So I think it starts with financial literacy and self-help books. I would say I would love to recommend Robert Kiyosaki, I would say, Rich Dad Poor Dad, Napoleon Hill, and the likes. It's really more of that, psychology. And I think Ray Dalio also in terms of grit and
When yeah,
perseverance. Yeah.
yeah.
I think that would
Awesome
be,
books. I mean,
help yourself first before you jump in. I think that would be the greatest advice I could give.
actually have one book of you like
Oh,
Napoleon Hill
nice,
right
nice,
here.
nice. Great.
I have a
Yeah,
couple
that's a
more
great
like
book.
here and there. Okay, awesome. One Loven, thank you. Really, I really appreciate what you're doing. You're gonna get to all the retail traders over the world. I'm literally saying
Hopefully.
that. Seriously.
Thank you so much. Thank you so much for having me, Alan. It's a great
Sure.
opportunity to be here. It's an honor for me. Thank you so much, and I really wish and hope for success and pray for success for the community that you're building, and for all your audience out there. Just keep trading. Have faith in God. Continue what you're doing. Thank you so much.
Yeah.
Have a great day.
Thank you.